Hello, everyone. This is Mark again, and I'll be doing your December 4th training. You should see the agenda in front of you. And first, we're going to go over Form 5498. It's just some retirement information. We'll go over, tell you what that is. A lot of these things I want to you'll be seeing these forms come through. So I want to make sure you know what they are, even if they don't even go on the tax return, just so you're not confused when they come in and you don't show your confusion to the clients, which is even worse. Health insurance and taxes, we'll tell you how those work together. Health savings accounts, city returns. I know we've done a lot of city returns. Now we're going to show on an individual client a resident return and a non-resident return at the same time. So this person will be doing a Lansing and East Lansing return. And then we haven't done a lot in Adam yet, other than just doing the problems and getting the information out of Adam. But now we're going to show how to record fees, both in Drake and in Adam. Basically, in Drake, it'd be an adjustment to the bill. I want to get you familiar with how to use the bill and how to PDF a tax return. So PDF, which I found out last year, a lot of students don't know what that means. That's just basically turning a return into like a hard copy type thing that's accessible online, so the client can then view it on their phone or on their computer. So that's what we do with every single tax return once it's complete, and then we'll be doing a problem, putting this all together, and then touching base on a few things that I think are important that we may not have touched base on enough. So the Savers Credit, we're going to do a problem with the Savers Credit, which goes way back, probably over a month ago, and then reinforcing some of the other things we've learned along the way. So with that being said, let's start with what is Form 5498. So I'm going to pull it up. Oh, before we get going too, so again, I'm hoping you guys are able to log into Adam. I sent you the link. And if you don't have your manual, again, you can just click on Friday class problems, click on any problem. I'll go to 25 since that's what we're doing. And then inside here, favorite links, here's the basic manual. And actually today, we're actually going to get into the advanced manual for one of the topics because it's not in the basic manual. And this is probably going to be the last class regarding learning tax information, because I think we covered everything I want to cover, other than we'll have some new changes for the 2020 season, which I'll cover those as when we have our own internal tax class. All right, but here, this is where you can get these manuals. All right, so Form 5498, which is right here. And as I showed you before in the last class, I love using Google. So what is Form 5498? Let's let Google tell us. So what it is it's retirement information. So if if you put money into an IRA, which is a retirement account, or if you have to pull money out of retirement accounts, Form 5498 is just for informational purposes, and it's coming from the the trustee, I guess, or not the trustee, but what's it called? Who basically administers these retirement accounts. They send that information to the client, and I believe it isn't even actually due to come out to them until the deadline, I think, is May 1st, May 31st right here. So when you have retirement or individual retirement arrangements, you probably receive Form 5498. So your parents are probably getting them, all right? I receive them. I usually get them again toward May after I've already filed my tax return. And it just tells me kind of like what the value in my retirement account is. So it's just for informational purposes. It doesn't do anything on the tax return. The thing is, the clients will bring that in if they get it before they file, and they give it to you. And just so you're not alarmed, like, what is this? You pretty much just push it aside, and it's for their purposes, so they know the value of their retirement account. And once they reach age, and this is a new tax law, once they each reach age 72, they then are required to pull money out of their retirement account. So all year, or while they've been working, they've been putting money into the retirement account, so they have some money when they retire, okay, other than Social Security. So all that money, as we've learned, has not been taxed yet. So that means the government didn't get any money, didn't get any taxes from that money. So they want their taxes. So at age, it used to be 70 and a half, and they just changed the rule to say age 72 now. At age 72, they're required to pull money out, a certain amount. It's called an RMD, a required minimum distribution. So every year they have to pull money out based on their age and based on the value of their retirement account. So then they pay their taxes to the government. Okay, so they use this form 5498 to determine how much money they're required to pull out once they reach age 72. So there's some information on that form that allows them to do the calculation. And then that's basically all the form does. It's for them. We don't use it on the tax return at all. One thing I do want to point out, because they may ask you this question. So again, the law did change. It used to be 70 and a half. They had to pull money out. Okay, now it's age 72. You might get some retirees that ask you some questions on that. And then also because of COVID in 2020, they actually were not required to pull any money out. So this RMD required minimum distribution. Now for 2020, it was not required. So some of our clients probably didn't pull any money out of their retirement accounts because they didn't need it, and they want to try to save it until they might need it, because they don't, who knows what's going to happen down the road. So if they're comfortable with their earnings right now, they'd rather wait and leave the money there in case they do need it at some point. So a lot of them do not want to even pull the money out because they don't need it. So with this 2020 option, a lot of them probably didn't take the money out. Okay, so they might mention that to you, and so I want to make sure you're aware of it. Don't stare at, again, blank face, or even if you're talking to them on the phone. That's kind of how RMD, and they use the terminology RMD too, so you kind of, hopefully you'll know that that's required minimum distribution. Just means what you're required to pull money out of your retirement account. Again, they don't have to do anything now. It changed to age 72. So if you look right down here, it says that when you turn 72. And for 2020, they weren't required to do any required minimum distribution. They might have done it, they may not have done it. So give you probably more information than you wanted to hear. This is kind of what the form looks like. Again, you're going to get, you might see these, you probably will see these. Just brush them to the side. They don't go on the tax return at all. Don't try to find anything in Drake. It's just for the client's informational purposes to calculate their return required minimum distribution. All right, close that one. Close this. Let's get back to our agenda. Okay, next. Health insurance and taxes, why do they go together? Okay, so when, and I'm not sure if you guys remember this, but when Obama was in office, he created what was called Obamacare insurance. It's the marketplace insurance, so it's so everybody can have insurance. And if you didn't get insurance, you would be hit with like a penalty for not having insurance. Okay, so that was actually all on the tax return. The penalty was calculated on the tax return, and they paid the penalty when they filed their taxes. It just got rolled into their regular, whatever other taxes they owed. All right, that went on for several years while Obama was in office, and then 2 years after he was in office, then Trump got rid of the penalty as of 2000. Actually, it was just last year, I believe, 2019. So in 2019, there was no penalty. In 2020, there'll be no penalty. So if they don't have insurance, we don't care. Okay, there's no penalty anymore. I don't have to ask the question, do you have insurance? Okay, these forms, when Obamacare was created, and because there were penalties for not having insurance, these forms are still out there, and the clients bring them in. All right. Again, just like the form 5498, we can just brush it to the side. There's 3 of them. We can brush 2 of them to the side. The third one, if they bring in, we have to do something with it in the tax return. So the 2 we can just push to the side, and the clients have no clue. Okay, they get all these forms, and they just bring them in because it says bring them into your tax preparer, but they're really not needed anymore. 2 of them are not needed anymore, and the forms are. It's a 1095. Do I not have it up here? Oh, it's in. Where did it go? All right, I know where it is, so I can find it here. Thought I had them all up here. So it's a 1095B. 1095B, that's coming from the insurance company. So like Blue Cross, Blue Shield. That's just all it's doing is saying that you had insurance, you and your dependent had insurance, and it'll tell you the months you had insurance. So this is what the form looks like. Because who has the policy, it'll list who's covered, what months they were covered, because back when the penalty was around and to enforce it, it was based on how many months you had insurance. So if you had insurance for 6 months out of the year and 6 months you didn't, then you got penalized for those 6 months you didn't. That's why it's broken up by monthly coverage. The penalty's gone. So I don't care about this form anymore. This showed me if they had insurance or not. I don't care because there is no penalty anymore. But the form is still out there. The companies are still producing it. I don't know if they're required anymore, but we saw them all last year. So again, 1095B, you can just brush it to the side. We don't need it. And if the clients do ask any questions, say this proves that you had health insurance. The penalty's dropped now, so it's not really a big deal anymore. Okay, keep it with your stuff, but we don't need to do anything on the tax return. That's the B. Okay, that's coming from the employer. Then there's a 1095C. And this comes from the insurance company. Okay, so this would be, wait, did I get that right? No, I'm sorry, 1095C is from the employer, B is the insurance company. Okay, I believe that's correct, or it's the other way around. Either way, it looks like C is, I'm sorry, the employer, B must have been the insurance company. Okay, this would just going to tell you the months that you had insurance, you and your dependents. Again, it's not needed. So 1095B and C are just for informational purposes to show if you had insurance and there is no penalty anymore. So I don't care. I just push it to the side and I do nothing on the tax return. The one that I do have to care about is the 1095A. And this form is coming from the marketplace. Okay, and the marketplace is also known as Obamacare. So you go to healthcare.gov and you can get insurance there. Anybody can get insurance there. So we have a lot of people that get their health insurance through the marketplace. Okay, and so this form is very important. We have to have this form to prepare their tax return. And a lot of our clients, because this is fairly new still, and I believe for the most part, they have to download this form online from healthcare.gov. They're not being mailed to them, so a lot of times they don't bring it in, okay, because one, they don't even know how to log in anymore because they forgot their username and password. So, and they don't tell us they had it. So we do the return, say they're getting $8,000 refund back, and then 2-3 weeks later, they get a letter from the IRS, and the IRS says, we're not going to process your return until you complete, it's Form 8962 is the official IRS form that is calculated based on what we key in off of Form 1095A. Okay, and the IRS just holds on and does not release any refund until that happens. So they bring the letter to us. We tell them we need the 1095A. They give it to us. We complete that Form 8962, which I'm going to show you how that all works in a few minutes. And then we send it to the IRS and then they release their refund. Okay. So on the client information sheet, which I thought I had one pulled up, apologize. Let's see here. Which we've been changing here and there. So as of 12/3, this is the latest one. And we had this on last year's too, to try to make sure the client has it. So right here it says number 4, did anyone in your household have health insurance through the marketplace? Yes or no? If they say yes, then if yes, do you have Form 1095A? We will need it to complete your tax return. So we actually list this out as a question because it's so important. If they do not have the 1095A and they were in the marketplace just one day, and they don't give us a 1095A, the IRS will not release their refund. Okay, so it's very important. A lot of them still don't even know what marketplace means. They don't even know what Obamacare means. Okay, they get confused with this question. Okay, a lot of them think it is Medicaid. They have insurance, they check the box, yes, and they don't even know what they're checking the box, because then they don't even have marketplace. And we confront them and say, you said you had marketplace. Do you have that 1095A? And I don't know what you're talking about. Well, did you have insurance through the healthcare.gov or Obamacare? No, I had Medicaid. Well, if you had Medicaid, that's not marketplace. Okay, that's because your income is so low, you're getting free insurance through Medicaid. All right, so there's a difference. I don't know what else to do. We have the question here. So if they mark it yes, we just have to make sure we get 1095A. If they find out they marked it yes, but in error, then we would just scribble this out and then change it and make a note that they really didn't have marketplace, because they do get upset if they tell us they had marketplace, but they don't have 1095A and we still do the return and submit it. It'll get accepted by the IRS, but the IRS will not release their refund. And then obviously if they're getting big refunds, they want it now. All right. So when they get delayed, they get angry. And when they get angry, they want to blame someone. And who do they blame? Their tax preparer. So we want to cover our butt, make sure we did what we were supposed to do. If they say they have marketplace and don't have 1095A, we're going to explain to them it's kind of pointless for me to do your return because the IRS will never release your refund. Just go to healthcare.gov, call them if you need help, and then download the form. We can't really help them because we don't have their password or username. And then now with that, they're not even coming in the office this year. They're going to have to do it on their phone, call the person. They'll help. They are pretty helpful, and it seems like people can get through to them at healthcare.gov. So, but they need that form, and it is very important that they get the form. All right, close this out. All right, now I want to pull up, and I thought I had it in here. I'll go into the problem here. I'm not going to start the problem, but I just know I have a one that's kind of filled out because it's the same one we're going to use on the problem. So this is what it looks like when it's filled out. Has their name, who's covered on it, and then it lists again each month. So how this works is this middle column here is called the silver plan. So with Obamacare Marketplace, there's bronze, I believe there's bronze, silver, and gold packages. Gold's the best, silver is middle of the road, and bronze is the lower package. All right. This is saying what the cost, and the reason these numbers are all here is because we're going to do a calculation on the tax return. So this is the total monthly premium amount that their insurance costs. All right. This is what it would cost if it was a silver plan. This column C, this is what the government is kicking in and paying for their insurance. So the premium's $425. The government is actually paying $220 of the $425 premium, and the rest the client is paying. Okay, so what marketplace insurance is all about is that it's supposed to be affordable healthcare coverage. All right, and if your income is low, the government is going to subsidize part of that, and they're going to pay part of for your insurance because your income is low. If your income is high, then they feel it's just like everything else works, like with earned income credit. If your income is high, you don't get earned income credit. All right. So if your income is high, they feel you don't need any subsidy to pay any of your health insurance premiums. So you would pay the full amount. So in this case, this individual, and how it works is in the beginning of the year, they have to tell a marketplace how much they think they're going to make for the year. And based on their income and how many dependents they have, they'll figure out, do they get a subsidy toward their insurance premiums, or are they going to pay the full amount? All right. So if they lowball it and say, oh, I'm going to make 20,000 this year and I have 4 kids, well then, yeah, they won't pay anything for health insurance. But say if they end up making 100 grand, when they file their taxes, the tax return is kind of like a reconciliation to determine, did you pay enough in health insurance premiums yourself or not enough, or should the government kick in more or less? That's how the tax return all flows into with health insurance and the tax return. So in this case, almost half of it was paid by the government, and then they paid the rest. Here's the totals down here at the bottom. We just go into a screen which I'll pull Drake up right now. I'm sure it timed me out like it always does. SKBY at 6. Make sure I get my password right. And pull this over here. And I go into Betty. And then where this is all at is right here under healthcare. And it looks like I filled it out kind of already real quickly. So it's, and now we're going to do this in the problem too. It kind of just, let me see if I can pull that form back up here. Here. So if you look here, it's going to minimize this a little bit. So this just says the marketplace identifier. It says Vermont, but it's going to be Michigan for our people. Here's a policy number, their name. This basic information, when the policy started, when did it end, who was on it. In this case, it was just one person, and it would be the same with Betty. Here's the amounts. So I'll move this over here. I'll pull Drake back up. So this would be Betty all by herself, no dependents. And then if the numbers are all the same, if you look here, all the numbers are the same every month, exactly the same, each column, 220, 220, 220, 16. So then I can just go ahead and take a grand total at the bottom. I don't have to list every month. But the reason you got to do months, again, because the way this penalty used to work and then the way this calculation works with these subsidies, it's based on insurance per month basis, not total for the year. So because you can have insurance based on the month, so you might cancel it. That's why we have to list them out on a monthly basis here. So it basically, once we do the problem, I'll show you, it's all it is data entry. There are some tricky scenarios. I'm not going to get in it. That's beyond the scope of this class. We have those listed out in the advanced manual. Where someone's divorced and all that, or they have, there's about 4 different scenarios, and we have them all covered because they do come into play occasionally. But you're probably going to run into this, and so you have to be aware of what the marketplace is, what Form 1095A is. I want you to be familiar with what 1095B and C is. Those are pointless. We don't need those for the tax return anymore. The client can still keep them for their copies, but we don't need them for the tax return anymore. So I don't want you to be confused when you see them and say, what is this? And you might do that the first time. That's fine. Again, ask questions. It's always better to ask questions than to just dive in and do something that you're unaware of. Never, ever do that. If you weren't taught it in class, if you haven't done it in a previous tax return or problem, don't do it. Okay? Ask the question, we'll answer it within seconds, and then you'll know it's correct, as opposed to second guessing it. I know you're going to ask a ton of questions. There's no doubt about it. We want you to do that. We expect you to do that. We've been doing this for over 20 years. We know you're going to ask questions. If you don't ask questions, you're going to scare us, and we think you're doing the return wrong. Okay? Doesn't matter how bright you are, you will ask. You need to ask questions. Okay? There's no way you're going to understand all this stuff on your own. We give you way too much material in a short period of time. So we're expecting you to ask questions. The senior preparers are expecting you to do it. They want you to do it. That's what they're there for. Don't think you're bothering them, okay? And if you are bothering them, just bother them anyways, all right? Okay, so that's the marketplace. We're going to enforce this when we do the problem. So let me show you though. I'm going to show you exactly what it does. That's what I need to do. So I plug these numbers in, okay? And with this return here with Betty, she's making $30,000, all right? So with me keying these numbers in here, and again, this is a total premium. This is what the government paid. I paid the difference, and this is just the silver plan, and this is used to determine, did I pay too much or did I pay too little? So right now I did pay, Betty did pay over $2,000 out of her pocket for health insurance, okay? I don't know if she overpaid or she underpaid. So maybe she paid too much and the government should have paid more. It's all based on her income. So we don't know that until we plug this in. So when I view this return, so it's Form 8962 is what does the calculations on here, premium tax credit. That's what that subsidy is called on the tax return. It's a premium tax credit, all right? It's a refundable credit, which you guys should know that that means you're going to get, you could, if it's a refundable credit and it produces refundable credit on this return, that means Betty will get some money back even if she owes zero taxes. Okay, it's like an earned income credit type thing. So here's, it looks at her income, 30,000. It runs through a calculation, which we're not going to get into. It's not important. It's too complicated and it's not needed. Just let the form do its job here. As long as you plug in correctly in data entry, everything else will come out fine. It's just going to compare based on Betty's income. Did she pay too much in insurance premiums out of her pocket or not enough? So did the government kick in too much or did they kick in not enough? In this example, repayment of excess advance payment of the premium tax credit. So on the 1095A column C, I showed you that the government did pay some of her insurance premiums. Right here, this calculation here based on her income, it's saying they paid too much. Okay, not a lot, but they paid in $163 too much. So that means she's got to now kick in 163 and it's going to fall on her tax return. That's how she's going to pay that amount. And where it falls is on Schedule 2, 163 right here. It's considered like a tax. So excess advance premium tax credit repayment. So this is a subsidy that the government kicked in and they basically paid too much of her insurance this year. So now she's got to cover 163. This amount then rolls into line 12B on the 1040. So right there, here's her regular income tax based on her income. So with 17,800 taxable income, her tax is this. Then I add in that 163 coming from Schedule 2. Here's her total tax now, 2,108. In her case, she paid in 3,000, so she's getting a refund, but she is paying that back. So that's all based on the numbers on the 1095A and what her income is. So now if I go ahead and change her income to, let's lower her income down to 20,000. So what that means is she's making less. So that means she probably should pay less out of her pocket for her health insurance. That's kind of that's how Marketplace works. It's trying to help people out that are lower income. So now let's see what happens. I go to Form 8962. Here's her income calculations. So now she is going to get, let me read this correctly. So total premium tax credit is $3,990. Of that, government's already kicked in $2,642. So now she's going to get $1,348 additional on her tax return as a refund because she overpaid. She out of her pocket, she shouldn't have had to pay as much because she only made $20,000 in income. Government should have paid more. But when she filled out her paperwork in January 1st, she probably was estimating she was going to make, say, 30, 35,000. Well, something happened. Maybe COVID came around and cut her pay, so she doesn't have as much income. So now she overpaid. So if I go to my Schedule 3, that's where that flows to. And right here, it's considered Part 2, other payments, and again, refundable credits. So refundable credits means even if she has no tax, she will get this money back. So net premium tax credit attached Form 8962. That flows to, I believe it's lumped into line 18D. And it's right here. So there actually is no earned income credit or additional child tax credit in this return. She's single. So there's the amount right there. It rolls into her overall refund. And that's how that works. So really the only thing you need to know is if they're in the marketplace, they need 1095A. Make sure you do not do a tax return without a 1095A if they're in the marketplace. Then just because they check the box on their client info sheet that they're in the marketplace, and if they didn't give you a 1095A, then you need to confirm, were you in marketplace? And they were, well, I don't know what you're talking about. Explain to them what that means. Obamacare, were you paying for your own insurance or anything through healthcare.gov? And they're like, no, I'm on Medicare. Okay, well then, for Medicaid, whatever, just stop then and say, okay, sorry, you must have misunderstood the question. And then make your note, because just because they said that doesn't mean it's truthful. So we don't want to get burned again, because again, if they really are in marketplace and they don't have that 1095A and we do that return, it's going to get delayed. And like I said, when it gets delayed, they get angry, they want to blame, and they blame their preparer. Okay, we want to cover our butt. That's why the client info sheet exists. One, it helps us do a tax return. It also covers our butt to make sure we ask the correct questions and we have some documentation to support what we did on the tax return in case they get letters or they have questions. We show them we did it because you told us to do it. Okay, because a lot of times, I just took a call last week. Client called in. He got a letter from the IRS and it said, we need Form 8962. All right. And I said to him, did you give Rick that the Form 1095A? Because obviously you're in the marketplace, right? And he goes, yeah, I've been in the marketplace ever since Obamacare existed. I said, well, did you give him Form 1095A? He goes, I gave him all those insurance forms and he said they're not needed this year. And so right away I'm saying, okay, yes, 1095B and C are not needed this year because there is no penalty. But did you give him a 1095A? And again, he's confused as heck. Okay, I'm rattling off numbers, and I'm not trying to confuse anybody, all right? I'm just trying to get to the bottom line. Did we screw up, or did you screw up? So, and he doesn't know what he gave him. I go, well, in the back of your tax booklet, if Rick gave it to you, you should have all the forms there that we use because we scan them in. I don't see it in any of the scans. And he's I don't have it. It's buried, whatever. Like I go, what? I'm guessing probably what happened is you gave him those forms. There are forms now that aren't needed because there's no penalty, but the 1095A is needed. Okay, so the only thing you can do is call healthcare.gov, get that form. We'll use that information on the form and fill out Form 8962, which is right here. That's what the IRS wants. And then we submit it back into them. But anyway, he was ready to blame, okay? And first person he's going to blame is a tax preparer. I looked it up, dug in. I didn't see any scan 1095A. Didn't have any client info sheet, unfortunately, for him to mark the box because we haven't been the greatest at that. Okay. So we're going to be good this year, though. All right. That's going to cover. And now if we had it and he didn't mark the box, then that covers our butt. So we didn't have it. So I'm scrambling a little bit. Okay. And I'm trying to assume probably what happened is because I'm assuming if the preparer got the 1095A, they knew what to do with it and would do exactly what they're supposed to do and not blow it off. All right. I wasn't in the tax appointment. I don't know. Okay, I'm hoping Rick did the correct thing, and that's probably what happened. But again, I'm just guessing. So the client was fine with it, and he's trying to find a 1095A so we can complete what's needed. But what I'm trying to get at is just cover your butt, make your notes, because usually if you do something wrong, it comes back. Okay, it's going to be hidden for a year or so. You're probably gone, graduated, whatever. But we got to deal with it. Okay, so we don't want to get yelled at. We don't want to refund people's money. We don't want to delay people's refunds. So we just want to do the return correctly and make sure it's all documented so we know why we did what we did. Okay, it's more important this year than ever because we don't even have the client in front of us. Okay, that's 1095A and marketplace. Let's get back to our agenda. All right, that's how health insurance and taxes work. Okay, now we're going to talk about health insurance and Form 8889. Okay, health savings accounts, HSAs, Form 8889. All right, and I think I actually have something in a manual on this one. Page 57 in the advanced, and I apologize, I don't have the advanced pulled up, so I'm going to go into my file and I'm going to go to my favorite links and I'm going to go to advanced manual and I'm going to go to page 57. Health savings account. Okay, what is that? And I was going to Google it too. I can Google it or I can just tell you. I'll Google it because I do want you guys to use Google because it does helpful. What is Form 88? Or I would say what is, I should say. And again, you can't rely 100% on all this stuff, but basically an HSA is it's like a bank account. Chase Bank, MSU Federal Credit Union. Taxpayers put money into it, okay, and the money that's in there is supposed to be used toward medical bills, okay. It only can be, not everyone can open an HSA account, and the reason you'd want to is because it's tax-free money. So you can, when any money you put in up to a point, you can claim a tax deduction on your tax return. So it's a good thing. All right, so you want to do that. So if you can, so you have to have a high deductible health insurance plan. So we just talked about health insurance, like marketplace insurance, and I believe those are all high deductibles, meaning like say I go to the doctor, I might have a deductible, the first $5,000 I have to pay, and then anything above that, the health insurance will pay. Okay, that's considered what they call a high deductible plan. That means I'm eligible for an HSA account, so I can put money into this account, and then if I have to go to the doctor, I pay money from that account to pay the doctor bills, and then I get to claim the tax deduction when I put the money in. Okay, and then when I pull the money out on my tax return, this is where you come into play usually, is you have to show, okay, I pulled say $1,000 out, and then I use that money to pay medical bills. Okay, so that's what it's designed for. And so if you don't use it toward, you pull money out and you don't use it for medical bills, then you have to pay the taxes on it at that time on your tax return. So again, it's kind of health insurance and tax return and how it all kind of comes into play. All right, so the form, if I have it up here, is right here, 1099 SA. So this is the form, HSAC form from an HSA. Usually that's all we deal with right here. So it's going to say, where do you have the money in, what account? So in this case, I got it at Michigan State University Credit Union. I set up a bank account for an HSA account. So I put money in. So if I put money in, this one's actually showing money coming out, because usually when they put money in, let me get back to the manual. It's probably the best thing to show you. Okay. First off, the screen itself, the form is 8889, and that's our HSA screen. Is right here, health savings account. This is in Drake. Okay, so there's two plans. There's a taxpayer only plan and there's a family plan. Okay, and they each have different amounts you can contribute. Again, we want to contribute. If the client contributes, that means they get to claim it as a tax deduction on their tax return. So I got to plug it in somewhere. So in this case, the family, they can deduct, or their limit is up to $7,000 they could put in to an HSA each year. If they're single, they can put in $3,500 into the plan. Right, so it is capped. In this case, in this example here, they're putting in $5,227. So this actually will show up as a deduction, and I'll show you in Betty's return in a second, as a deduction on the tax return. Down here, HSA distributions, this is when they're actually pulling money out to pay medical bills. So they will actually get that form, that 1099, and they do get these, and they'll bring these in. 1099 SA form. This is going to show how much money they pulled out. And then my question is, did you use that all for medical? So in my 20 years of doing taxes, 20 plus years, I've only had one time somebody said they didn't use some of it for medical. They said they were in a pinch, they were hungry, and they were in a Taco Bell line, and they used their HSA card to buy a Taco Bell. So I actually had to subtract out like $25. So it was actually, they were pretty hungry. So they bought $25 worth of Taco Bell. Other than that, every single time I've asked them, they've said they've done it. I don't need to see receipts. I just have to ask them the question, and then I put the amount on here. So normally, 99.99% of the time, I'm probably the only one that's ever had this in our tax office, these numbers will match. So you'll see this one right here. It'll show the distribution on the 1099 form, and then you just have to ask the question. And we don't have this on the client info sheet, so if they get this form, again, you're going to pick up the phone and call them and say, hey, did you use all that amount for medical? And I'm almost certain they'll say yes. And then you just put the amount in here, then you're good. If you didn't put anything in here, this amount then would be added into income and they would pay taxes on it. Because when they put the money in, like right here, or they could have done it many, many years ago. This is actually a subtraction from their income, so this money is not being taxed right here. So when they pull it out, as long as you use it for medical, it's all tax-free money. So HSAs are a good thing, and they're becoming more popular. So we're seeing more of these forms come through right here, these HSA forms, the 1099 SA forms. Very simple thing to do. So I'm going to show you and see if we have anything else in here. These numbers are off a little bit. I don't think we updated them for the 2019, even though it says it. But it's pretty much what I just told you. So let me show you in Betty's problem real quick how that works. One thing else I want to point out is on the well, Betty. So I type in HSA. That's the screen that pops up. I got screens flagged, so I have to say, is it the taxpayer or the spouse that has a plan? So let's say it's a taxpayer, Betty here, because she's all by herself. So it's taxpayer only, doesn't have a family plan. And the reason this is taxpayer family, this is just gonna, so then the software knows what the limits are. Again, 3,500 is the max you can put into an HSA account per year, and then 7,000 if you had a family. That's why you check the box. Normally, I don't see many clients actually putting money out of their pocket into the HSA. How it's working is they're doing it through their employer. So if I come in here, I'm gonna switch this back to 30,000 for Betty. Usually it's down here in box 12 and it's code W. So you're going to see this on the W-2. So employer contributions to an HSA account. And let's say it's $2,000 in this example. All you do is you just do the data entry and all that. And then this amount right here is actually already been subtracted from their income. Okay, so this doesn't get subtracted again. It's already it's already tax-free money. So this is just information telling me that they put 2,000 into an HSA. So if you get W-2s, which I'm pretty certain you will, with a code W, you see this, then if they put money in during the year, chances are they probably took money out. So if you see a code W and you don't see this form, 1099SS, 1099SA, probably should ask them, like our due diligence, just ask the question, say, did you take any money out of it? Did you pull money out for your HSA for medical bills this year? And they might say no. So if they didn't, then they won't even get this form. If they say, yeah, I did, and say, well, do you have this form? And they're like, no, I didn't send it this year. I'm like, well, probably should call the bank or whoever you have the HSA account and find out, because we need to put it on the tax return, because the IRS will send letters out if these forms were issued and we don't have anything on return, because they just need to know, was it used for medical? And if it wasn't, they're going to add it in as income on their tax return. So I got 2,000 here. Go back to my HSA account. Let's say they took out $4,000. Okay, so they had money in the account from over the past years, so they had some accumulated, and they took 4,000 and they used it all for medical, because that's normally always what you do. So I typically have nothing up here, and then the amount from the W-2 actually flows into this form, even though it doesn't do anything. So when I look at my form 8889, here it is. So because I'm myself, I'm capped at 3,500. It shows my employer put in 2,000. So the most I could put in out of pocket myself would be another 1,500. But typically they just don't have the money to do that. So they just whatever the employer puts in. Right down here, this is saying what was my distribution. I took 4,000 out. I used it for medical. So zero of it, none of that's going to be taxable income. If I only did 3,000 toward medical, then 1,000 would be added in as income on my tax return. But you're not going to find that. They're always going to say they used it for medical. And then that's it. So it's pretty straightforward. You probably will see these forms. Normally you're just going to see this. Okay, the distribution amount. You just go into the HSA screen. Go ahead and put it in down here. I mean, obviously identify these. You're probably going to see some W-2s with the code W. Just fill it out just like that. Do the rest. Hopefully they have an HSA or the 1099 form with it. If they don't, just ask a question. And then that's it. That's all you need to know. That's all you need to know about these HSAs. But they are becoming more popular. That's why I wanted to bring it to your attention and show you how we handle it. Okay, next on the agenda is city returns. Okay, Let's get to our city returns. And this is when we have a, I'm going to go into Betty. So I'm going to set this up in Betty here, just like the problem is. So hopefully it's not overkill, but the more you see it, the better it is. In this example, which is a common one, I have Betty here who, she's a Lansing resident. Of course, we all know we put LN down here, right? And then she also worked, let's say she worked in East Lansing. Okay, so in that case, she has to pay, she's a resident of Lansing, so she's got to pay her 1% tax, right? Because I'm a resident. East Lansing says, oh, wait a minute, you worked in East Lansing, I want some money too. All right, I want a 0.5% tax because you worked in East Lansing. So on the W-2s, let's put 30,000 here. You're going to see things where you might see both two cities at one time. Okay, so if I had East Lansing 2, and I'd put EL for East Lansing, and then when I view this return, it's going to produce a Lansing resident return, because I said I'm a resident, 30,000. Here's my 175 tax with how I owe total 1% of that. That's $294. East Lansing did a non-resident return, 30,000, 0.5% tax. They took out 175. I'm actually getting $28 back. My tax is 147. So how this works is I pay my tax to East Lansing. They get their money, but Lansing is going to get shortchanged and only going to get half, because right here, this is what I took out of my paycheck. I have credit for taxes paid to another city of 147. So total is 322. My total tax is 294. So I actually get 28 bucks back. So the whole thing is you're not supposed to get double taxed. So just because I worked in East Lansing, I live in Lansing, don't tell me I got to pay 0.5% to East Lansing and then a full 1% to Lansing. So I get credit for taxes I paid to another city. So technically, the most I'm being taxed is 1%. So basically, Lansing's getting 0.5% out of me, and East Lansing's getting 0.5% out of me. That's how we handle it when we have multiple cities on one tax return. Problem, we're going to do exactly what I just. And with East Lansing having tax now, as of 2019, we see more of this than we used to. So you have to be aware of it, okay? Because you're probably going to see them. So don't get flustered when you see two cities on a W-2 and freak out. Again, you can freak out. Just go talk to a preparer, senior preparer, and they will explain exactly what to do. Or when you watch this video, do a problem. Maybe you're an expert now and you don't need any help. But the key is you've either been trained by me, you've done a practice problem on your own that maybe it wasn't taught in the class, or you've asked the question to a senior preparer. If it's not one of those three and you're doing something and you don't know how to do it, stop and go ask a question. That's probably almost more important than I'm teaching you right now, is stop and ask a question, okay? Usually you won't get in trouble, you won't do it wrong if you ask the question. Now, if you find yourself not remembering, and you've asked the question over and over again, then the senior preparer might get annoyed and say, well, if you got a memory problem, the next thing to do is write it down. Okay, so if I find myself not being able to remember something, and especially if I keep doing it, then jot down notes. Okay, this isn't like an exam at MSU where you can't have your notes. You get notes when you do taxes. Use your notes when you do taxes. If you find yourself not able to remember something and you keep asking the same question over, and then you're scared because you don't want to ask the question over and look dumb, write it down then if you can't remember it. Okay, there's nothing wrong with that. Have your little cheat sheets. I have my own cheat sheets. When I find myself, I might only do something once or twice a year and I can't remember everything, so I make a note. I know where to go to look at my notes. And then, again, this isn't a final exam. You get notes. These are little tests, I guess, but you get notes on this. And you can even ask the teachers. Okay, so we're trying to make sure you get them right is what we're trying to do. I'm not trying to put pressure on you. I'm just don't do anything that you haven't been trained on in the tax software. Okay, next on the agenda is Okay, how to record tax prep fees in Drake and Adam. All right. So we haven't done any of this yet. I mean, it's simple once you learn how to do it. So let's just say I'm doing a tax return and I want to make it a discount. That I usually how this works is any new client that comes to us, we give them a $25 discount just for basically kind of trying us out. Two things. One, to try us out and to get them in the door. Usually discounts help. But two, I need to know what's working for my marketing campaigns and what's not working. And the only way to get them to tell me how they heard about us is usually to give them an incentive, which so I put a discount on it. So if it's the internet, they get 25 off. If they did a Google search and they found us, they get 25 off. Even if there's no coupon or anything, I don't care. I just give them the money off because I want to know how they heard about us. And I want them to help try us out. Makes them, they're happy because they get a discount. Road sign, they get 25 off. I don't care if they're a new client, they're getting 25 off regardless of how they heard about us. Even if they saw us, a t-shirt, it doesn't make a difference. So to do an adjustment, so here's the bill right here. So the total is 170. You guys probably should be get familiar with this. Obviously, we haven't looked at it yet, but because the clients will question the bill sometimes. Why is it so high this year? Okay, and again, you should be looking at comparison. So if you have last year's software up, now the comparison screen doesn't show the fee. Okay, it just shows your refund amounts and how you come up with that. You have to go into last year's return and actually see what kind of forms. We bill based on the forms. If you look here, here's 90 for the 1040. Here's the HSA account, form 889. Here's the 8962, 15, $10. Michigan 1040 is 20. Property tax credit this person had was 5. City return, they had 2 city returns, 15 each. Total is 170. So if they say, oh, you went up this year. Well, last year you didn't have an East Lansing return. So we bill by the form, and now we have to do an East Lansing city return. So our fee did go up, but we had to produce another form. So there should be an explanation as to why the fees went up. Okay, so you should be able to explain. Maybe they got earned income credit this year and they didn't get it last year because their income was too high or too low or whatever, or they didn't have kids on the return. So we bill by the forms. Usually the more forms you have, the more difficult the return is. It means the higher the fee because that's the more knowledge has to be trained and blah, 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 All right, so let's just say I'm going to make a discount to this one. Say it was a new client and they heard us through the internet. So what I do is I hit escape. I go to the bill screen. So I type in, the easiest thing is type in bill. I can probably find it somewhere. I think it's under other forms up here in the tab, but I don't really know because I always just type in bill. Quickest way to get there. Down here under description, this is where I can either add to the bill or I can subtract from the bill. Typically, you won't be adding anything to the bill, usually not. So my description, I would just type in internet, kind of how they heard about us, and I hit minus 25. So I know sometimes preparers forget to put the minus, and if you don't put a minus, you actually add 25 to the bill. So client may not be happy with that. I would be happy with it because that puts more money in my pocket, but it's not right. So just here's the fee, 145. I go to the bill. So it shows the total. It shows breakout, $25, internet, 145. Okay. That's how we do it in Drake, which is important to do. Okay, client sees this amount and all that. And then if we're going to deduct our fees from the refund, we need to do this here. That's for another class. But then the preparer then actually takes this information and then puts it into Adam because that's actually where we record our payments. Okay, that's where we reconcile at the end of the night if they pay with cash, check, or credit card. So we need it actually in Adam. So Drake tells us how much it is. We then take that information to Adam. Unfortunately, we have to do it manually. And then that's how we collect the money. So I'm going to then show you in Adam here. So let's just say I'm in problem 25. I'll do it here. Actually, I'll go to Betty's. So I have a Betty problem in here too under my. So I go into Betty. And here you're inside the file. Now I know you guys probably have been going just like, here's Betty, and I go right into the folder. Okay, because this is where all the tax documents are right here. If you actually click on their name, you'll go right into her file. Okay. or you can still click on the folder, and then right at the top here it says back to file. That puts me into her regular file. From here I could see like her if she had address, phone number, and all that information up here. But then if I scroll down right here under transaction information, and there's nothing in here right now. This is where I'm going to put my fees and my payment. So I just click the button add transaction. And I'm going to go ahead and log in. It's going to say fees, tax prep. And to pop the fee, I'll say 170 because I think that's what the total was, right? I'll go ahead and save it. So now her balance is 170. And when she's a new client, right here where it says account information and it says referral. So either the person, usually the person who checks the client in will probably log how they heard about us. But if they didn't, the preparer will, because you remember on the client info sheet, it says it right, well, you guys probably haven't noticed it. Right at the top, it'll show how they heard about us. So let's say if she's internet, when I switch it to internet and I save, now I can track my marketing campaigns with reports I can run because now I know how she heard about us and I can see how much money comes in from this. But then right here, it automatically will put the discount down here. So it's going to net it. So you don't even have to put the discount in. So now the total is 145. And then, we have a dedicated cashier at our office. So they will actually take the payment, or we may show you how you could actually process a credit card too. So like if the client's giving you a card over the phone, you can just click on pay with credit card and you could enter the card information right here, hit send payment, and it automatically would record it here in Adam. So the way we're doing things this year, where the client isn't basically in front of us, we'll probably have the preparers process credit card payments over the phone. Or they can come up and do it to the cashier, whatever the client's comfortable with, doesn't make a difference. Okay, but I just want you to see this is the preparer's job, is to log the fee in. Drake tells you what the fee is. You then have to manually put it in here. And then from there, this is where we actually log payments and track what people owe us if they haven't paid us yet. Okay, that's that part right here. So that's how we do it in Drake and Adam, adjustments to the bill. Next, I'm going to show you how to PDF a tax return and upload it into Adam. And the reason we're doing that is, one is I like to store the tax return in Adam, like a copy of it, and I don't want a paper copy, and we don't have file folders. Just in case something happens to Drake, I can always see this was the final copy that we gave the client. Okay, but also just as important is the client will then be able to access this tax return once we put it in Adam. They can pull that up and view it on their phone or their desktop computer or their iPad, whatever. So, the hopes is we don't actually have to give them a paper copy. So they can actually see it on their phone. So what's the point? You get a paper copy, one, we have to produce it. Okay, we got to print it out, assemble it, give it to the client. The client then could lose it. There's some information in there, socials, kids, direct deposit info. So you don't really want to lose it. Sometimes, the clients are like, what am I supposed to do with this? Nowadays, as younger people keep, growing up and then going off into the workplace, they're used to doing everything on their phones. So they probably don't even want a paper copy. What am I going to do with this? I don't even have a file cabinet anymore. So what am I going to do? Just going to sit at home and get lost and tossed anyway. So if I can get it online, I'd rather get it online. So you guys are probably thinking that way too. So we can do that for the client. Makes it very easy for the client, makes it easy for us. We prefer to do it that way. So they're going to get an online copy whether they want it or not. So if we give them a paper copy, they're also getting an online copy. It doesn't make it happens all at the same time. So to do that, let me close this out. Pull up Drake. So I'm in my tax return. So all I did is view it. Like you guys obviously know how to do that. Hit continue. Then, I'm not sure what you guys have been doing lately. If you just if you look at these tabs up here, all forms, it defaults to all forms, and then you got your federal, miscellaneous documents, your Michigan, your cities right here. A lot of times what we'll deal with is the sets tab. So I can control and manage the sets tab. I can't control and manage the all forms tab. So when I click on sets, here you have signatures. So we haven't talked about this yet, but when the client electronically e-files a return, we have to get some signatures from the client. So that's where these come. I have all the signature documents up here, so I would have to print these off and the client would sign them. The client copy, this is what we would print out in our office and then produce a folder, hand to the client. Okay, these are automatically directed right to our printer. This one, uncheck this. This prepare copy, I have it defaulted that, and this, if you look here, it's got federal's in here, Michigan's in here, and the cities are in here. Okay, this is a duplicate of what the client copy is. I can't control the name of it. It says prepare a copy, but really, this is basically going to be a client copy that we're putting online to them. All right. So when I hit print, so if I were to check this box and I hit print here, it'll send this to the printer. It'll send this to what they call the Drake PDF printer, which means I'm going to print a PDF, that's what it's called, a hard copy on my computer, and then I'm going to save it in Atom. So I'm going to uncheck this because I don't want to send anything to the printer. I hit print. My print dialog box pops up. Okay, and normally this is actually going to the printer here. These are all going to the printers. And then this one, the prepare copy, is going to go to Drake PDF printer. If it doesn't show that, you can just hit the drop down. It's always going to be at the bottom. Okay, don't worry about passwords. Atom's all secure, so we don't need to put extra passwords on there. Then you just hit print. Okay, another box is going to pop up. So see how it says PDF files? That means it's not going to a printer. It's just going to be stored on your computer. So you have to know where it's being stored. So what you need to be important, one, it's going to automatically name it, which is nice. It's got the year, the tax return, and the client's name, which is good. It's easy for the client. I wish it didn't say prepare a copy. I can't control that though. Right now I have it going, we want it to go on your C drive of your computer, and everybody has their own folder. All right, so if right now mine's going it's going to workstation 106. That's exactly where it's supposed to go. But let's just say it wasn't going there. So what you need to do is, if you click on this PC, and then you scroll down and you find, now you're going to see a couple drives. So in my case, I have a D drive. That's going remotely to, as you know, we access Drake remote through companies called Veritas. So we're actually remoting into their servers, and that's where Drake is running. Okay, the D drive is on their server. This E drive is on their server. I don't want to put this hard copy on their server. I want to put this hard copy on my local workstation. So name of my computer, C. I'm looking for the C. This is the name of my laptop. I double click this. This pops up. These are the folders on my C drive. And you guys are going to be putting it in. Each C drive computer should have its own little workstation folder. So mine has workstation 106, yours might be workstation 100, workstation 90, whatever it is, you'll know what it is, and you want to put it in the same spot each time. So I just double click this. It's going to open this up. Once you get to the folder, so you do many returns after this, it'll keep defaulting back to the same folder, so you don't have to go through this process. But whenever the computer gets reset or updated, it loses the path. So you need to know how to get back to the path. This is how you get back to the path. Try not to put it on the remote server. Okay, so just when it goes to PDF, just look to see where it's going, because it might be defaulting to the wrong spot, and then you're not going to be able to find it, and you have to do it again anyways. And then it's now stored out on their server, which we don't want to increase the storage over there, because then I have to pay more for it. We want to put it locally on the C drive of your computer. You hit save. It's going to produce this PDF. Okay, that's calculating it right now. All right, now I didn't get you might see a PDF that pops up here for viewing. If you see that, you don't need to see that, okay? To get rid of that, you want to go to Setup, printing, printer setup, and everybody can do this. Then you go to your F8 tab right here, edit printer settings, select Drake PDF printer, and if you're seeing that PDF launch, you probably have this box checked. Uncheck that box, then hit update. Otherwise, you're going to see that annoying PDF that you have to close out continuously for the entire time you're doing taxes, which isn't, you don't want to do that. And you might have to do this. This is a Drake thing. You might have to do this on every workstation computer you work on. So say if today you're working over here in the corner, tomorrow you're down the hallway, and you're like, wow, why is it popping up there? It's because it's kind of designed based on computer. So that might happen. If it does, just go in here and do this. So hit OK. Is there another thing I want to show you on this? Oh, one more thing I want to show you, I think. Setup, printing, printer setup. Sets, go to the Sets tab. If you see where it says watermark text and it says, it probably is going to say prepare a copy, just delete that out. Okay, we used to have it say client copy, but it causes more problems than it's worth. So I'm just going to give the client a clean PDF tax return with no watermark on it. So just go ahead and delete this out and hit save. Okay, so now I PDF the return. I showed you how to clean it up if your workstation is showing pop-ups and all that, and then has a watermark on it. So I would do that. And again, you probably have to do that in every computer. Now I'm going to minimize this. Now I'm going to go into Atom. And there's two places where you can upload the return into Atom. I can come right down here and click on account. Actually, there's three. I can click on account uploads. That's going to pop this box up. This is how I attach it. Okay. I can do the same thing right here. Add account uploads. My box pops up. And how I do this, and I'm just going to go ahead and label it tax return. Okay. And then I'm going to do a browse. And there it is right there. It should be at the top. I just double click it. I could also drag and drop, but I think it's easier just to browse. Then I hit save. So now I've just taken that tax return off my C drive. Actually, I've copied it. Still on my C drive, and now it's also in Atom. And where that's stored is, I click on account uploads, and I scroll. I got way too many things in here. I'm going to hit organize by upload type. Here it is right here. So if you have a lot of uploads in here, you just check this box. It'll kind of organize it. Tax return. Here it is right here. And now in this case, they didn't have access. Normally, the client will have access to this, like in the real, when we go live, they will, and they automatically get a text and an email sent to them with a link showing how and explaining how to access the tax return. So it happens pretty quick. So this is what the PDF return looks like. So when I select this, pull this over, this is the Drake PDF tax return. So this is what they see. They see a nice cover page. They got the client letter. It kind of summarizes, the refund, how they're receiving it, gives a comparison, privacy letter that we give them. Here's a 1040, the Michigan 1040. Here's their bill, the Lansing. So this is their full tax return. This is exactly what we give them as a paper copy, and now they can view this thing on their phone. So it's very nice for them. It's nice for everybody. Okay. So that's what I want you guys to do in the problem, and I'm going to do it in the problem with you because I'm basically going to do the problem for you, but you guys are going to be doing it on your own once you're able to get back in the office. Okay, so that is how we, go back to my agenda. That is how we PDF a tax return and then upload it into Atom. Oh, and the other way you can upload it into Atom, so I showed you, you can quickly click on here, account uploads, same pop-up box, here, pop-up box, or if you're actually in this page right here, we don't have the pop-up box, but what we have is the browse. You grab it, you name it, tax return, and then you save it. Same thing. So it depends on where you're at, but now you see we have two tax returns in there. So that is how we do it. So we do that in every single tax return you do. So you will definitely become familiar with that. We also log the fee on every tax return we do. So it's not, tax preparation or tax law or anything, but there's more to working at the office than just learning how to do taxes. You got to kind of know how the office flow is. So this is the first step of introducing a little bit of the flow. The next videos will introduce more of the flow, basically how the office is going to work, because you got to be, familiar with that too. Just another learning thing, not a big deal. So I'm going to go ahead and we're going to do problem 25 now. So let's close the agenda out. Let me close all these out of here. The advanced manual anymore. Let me look at my notes to make sure I covered everything before we get into the problem. Yep, looks like I did. Okay. So go to the home page, employee training. Now we're going to go to Friday class problems, and we're going to do number 25 right here. So again, how I've been doing is I just click on the folder, shoots me right into here. So I have a client info sheet, got my W-2. Here's my 1099 SA. So that means they have an HSA account. They pulled some money out. And here's my 1095A. That means they were in the marketplace. So let's take a look first at our client info sheet, see what that looks like. So I got a single client, or single, marital status, single. I show their prior year. This is what I was talking about, how they heard about us. Everybody will fill this out. Tell us, what brought them in. Right here, I won't talk about that. Yeah, that's when we go over the 2020 changes. So did you live or work in city, Lansing, East Lansing, or Jackson? So they say yes. So I know I either, no, we just combined this row. So I don't know if they lived in Lansing or they just worked in Lansing or which city, but I know something happened. So I probably got to ask them that question is, I see you check the box. What did you do? Did you live or work? Because remember, just because their address right here, now in this case, they did say they lived here all year. So then I can figure out that they were a resident of Lansing, but this is a mailing address. It doesn't necessarily mean where they lived last year. Okay. And did anyone in the household have health insurance through the marketplace? They said yes, and they have the 1095A, which is perfect. That's exactly what we need. In this example, this one, let's switch this over to Altus. They didn't have unemployment benefits. I forgot I was going to throw that in this problem, and I didn't. So no unemployment benefits. Okay, let's get started here. So this is just basic information. I'm going to key it all in, see if there's anything on here that stands out. So they had a W-2, uncheck that box, no unemployment. The big thing on this one, and they had, they didn't rent, they were a homeowner. So we're going to do a homestead property tax credit, and they want direct deposit or direct debit if they owe money. Okay, and there's their account. Okay, the main thing I'm going to point out here is we're going to do this marketplace insurance. So I was going to do unemployment, but once I switched it out to put in the 1095A, that was enough for a problem on its own. And I think they do have a saver's credit, so they have money going into a retirement account. So let me move this over here. And again, you guys can pull this up. I don't know if you have two screens or not. You can always print it off if you want to follow along. And I'm going to pull my Drake up here. And so my social 800. And one more thing I want to point out on here is that if you notice the social, the way we have this set up now is I can't put the little number icon in here anymore. So now it's going to 09. That's my prepared number. You don't put in 09. Okay, you're going to put your student number in here just like always right here. So it's 820, your student number, then 26. 2001. Oops. 820 01 6. New client is 1040. So they're single. And again, I'm not putting any punctuation in. Birth date is, what happened to my birthday here? 2/1. Okay, birth date in here. 02/01/1996. Actually, let me change that. Make her a little older, 29. Okay. Sales manager. All right, phone number 507-420-0060. And email. Gab@gmail.com. All right, address 225 East Frederick. Again, if there's punctuation, you don't put it in. F4 to get rid of the flag. And 48906, I said she's a Lansing resident and Lansing School District. So LN for Lansing. Control Shift S if you don't know what the Lansing School District is, the code. Go. And it's 33020. No virtual currency, and my number is 1. Okay, that screen 1 is done. And she has no dependents. Okay, makes that part easy. And I'm going to go ahead and now key in, I think, my W-2. Let me minimize this. So let me pull up my let me look at this. Okay, so let me look at the note here. Savers credit. Taxpayer didn't take anything out of a retirement account in the last 3 years. So hopefully you guys know that that's important. So if she puts money into a retirement account like a 401k, which I think we're going to see on her W-2, then I have to ask her, did you pull any money out in the last 3 years? And then I fill that in on form 8880. And then I want to see if she's eligible for the homestead property tax credit. That's what MICR stands for. And she's a homeowner. So she didn't bring any statements, so I have to go out to the Lansing website for property taxes to look that up, which is pretty common. All right, I'm going to go ahead and look at her W-2 real quick. Pull this over. So here's her W-2. So she worked at Michigan State. So let's look down here. One is before we get down here, here's her wages. Code D. So right here, that means D means she has a 401k. So she put in $2,000 into that. That's why there's a difference between box 1 and box 3. So that $2,000 is tax free. But then I want to see, is she eligible for that savers credit, which is a non-refundable credit. But again, that's when I have to ask her the question, did you pull any money out of your retirement accounts in the last 3 years? And in this example, this problem, she said no. Code W, this is that health savings account. So her employer put $1,000 into the health savings account. This money has already been, it's not been taxed. It's not included in box 1 here, or 3 or 5 of her wages and earnings. So it's not being taxed. Okay. So my question to her should say, if she doesn't give me that 1099 SA form showing if she took any distributions out of her HSA, would be, I see you have an HSA account. Did you pull any money out this year? But in this case, she gave it to me. Down here, this is no different. Now 18, because she's a resident of Lansing, but she worked in East Lansing. So this employer got it right. Usually Michigan State would, because they obviously going to fill out for East Lansing taxes. So this is showing that she paid in both to the city of Lansing and to the city of East Lansing. Okay, so let's fill this out in Drake. Go to my W-2 screen, T for taxpayer, and my EIN number 38100278. Michigan State, I got 35532. And I think I talked to you guys about getting comfortable using the 10 keypad. And if you don't even know what that is, on your keyboard, that's to the far right, your number pad. And I know you're not going to know how to use it. I still don't know how to use it, where I can type without looking down at it. But even when I look down on it, it's a lot quicker to enter numbers there than it is up above your letters. Okay, so that's my tip for the day. Get comfortable using the 10 keypad, stare at it, I don't care. you will key in at a minimum of twice as fast doing it that way as opposed to using the top row across. I guarantee you that. If you get really good at it, maybe you'll do it without even looking, but I doubt it. 37, 532. And again, these numbers, box 3 is just a percentage. That's, I mean, box 4 is a percentage of box 3 and whatnot. So you just want to make sure you get these numbers correct because they're going to be different because I got a code D. So the first 2,000, we didn't pay tax on that. Code W is the HSA contribution the employer made. Fly through here, they have a retirement account. I check that box. Come down here to Michigan. And I have withholdings of 1,215. Local wages, 35, 532. This is my Lansing. And I'm going to do, because I have, so how I do this for 2 cities is I just do it right underneath, just like it is on my W-2. Okay. So right now, hopefully somebody out there watching this video says, Mark, what are you doing? You're not supposed to type in what is on the W-2. You're supposed to put the abbreviation. That's what Drake wants. It wants an LN. It doesn't want LANS. It wants EL. It doesn't want East space LANS. If you look at the drop down here, you don't see that in there. You see abbreviations. The reason I did this is because you will see W-2s like this, okay? Do not spell it out, abbreviate. You might even see something that just says city. And then you're like, what does that mean? What city is it for? And then we just kind of have to, unfortunately, we got to kind of guesstimate and assume, well, they lived in Lansing, they worked in Lansing. I'm assuming when they say locality name is city, they probably mean Lansing. Okay. And so I will put Lansing. But I don't really know because their employer didn't tell me. But they do this a lot. Okay. This is just based on their payroll software. Okay. They don't always put the abbreviation, but our tax software, Drake, only likes abbreviations. And if you do not put it in there, it does not give them credit for this. So I'm going to do this, continue working on this problem and leave it like this and show you what happens. So I've seen it happen. Hopefully you guys will catch it. Just put what Drake wants. So unfortunately, we had to do what the tax software wants. Otherwise, it doesn't produce what we need, which is a correct tax return. Okay, that's what I wanted to point this out here. All right, escape. All right, I'm going to close this out. I'm done with my W-2. Let's see what other notes I have. So lived in Lansing all year, worked in East Lansing. The software is going to take care of it, so I don't have to do anything. Okay, it's going to automatically give me a credit for paying taxes to East Lansing on my Lansing return. Okay, here's my 1099 SA form. So this is for my HSA. And is it popping up? What's going on here? Oh, that took forever. Okay, here's the form. So I got, this is what I was talking about. MSU shows I pulled 1,500 out. Don't worry about the distribution code or anything. It's going to have checked HSA. That's all we're going to work with. You're never going to work with any of these. So all I did is they pulled 1,500 out. And my question to them is, did you use that toward medical? And their answer to me is going to be yes. It always is. So, but I do need to ask the question. So I'm going to go back to Drake. And the shortcut to get to that form is HSA. I come up here, T for taxpayer. There is no spouse. Taxpayer is, they have the HSA just through the taxpayer because I have no kids, no family. I zip right down here to my flag field. I put 1,500 in. They told me they used it for medical. I do another 1,500 and I'm done. Don't worry about what the employer put in. That's going to automatically flow forward. If you look up here, it says HSA contributions made in 19. Do not include what's in box 12, code W. That automatically pulls forward. We've already got the tax break. We never paid taxes on that money to begin with. I can't take a tax deduction and do it all over again. Okay. Escape here. I'm done with that form. Very simple to do. Next in my list here is the 1095A. Okay. This one's a little more complicated. There's more data entry, basically, is what it is. This is exactly the same one I just showed you for my example. So I'm trying to make it a little bigger if I can without distorting it. Disregard where it says 2014, reduces it for 2019. I had to find this online, okay? Disregard VT, we're putting MI for Michigan. You can put everything else in here except the dates. We're going to put in, 1/1/19 to 12/31/19, same here and here. And we're going to use the numbers just like we have here. So just assume this is like a 19 and not a 14. Move it over here and pull up my Drake. So where that's found is healthcare tab and 95A, because this is a 1095A marketplace statement. So taxpayer is the one who's on the policy. So it's based on who the policy is. Now there's only one person here. Marketplace identifier, all I'm doing is data entry now. So it's MI for Michigan. The policy number, if I can make this bigger over here, hard to see. Looks like it's A87K. Must be longer in Vermont. S 8379. Whoops, I didn't even type. A87. Fortunately, they don't match up the policy numbers with anything, so even if you get it wrong. 837. Issuer's name is Blue Cross Blue Shield. Okay, policy start date of 1/19 to 12/31/19. Now here would be the drop down. So in this case, I only have one person, Hannah here. If I had kids or a spouse, I would have it down here. So I can have one. That's usually plenty. Or I'd page down and do another one. It's going to pre-fill everything in except for the start and end dates. So I need to do that. Just take it right off of whatever's on the screen. So now January through December, the only time I have to fill in any of these columns is when anything's different. So if there's one month that's a different amount than the other months, I have to fill in all of them. Okay, so this can get very tedious if you have to fill in, that's 36 entries, okay. Normally, they're all the same, so all I have to do is come to the bottom here and enter that. So if you look over here, these are all the same, so I just take the total at the bottom. That's usually what it is, but not always. Okay. And my total is 5,102. I'm going to round. And then for my silver plan, 4,954. And then 2,642. Okay, and I kind of went over that pretty much in great detail in the going with Betty, so I'm not going to do it again. Okay, so that's it for the marketplace. And I think I might have everything. Oh no, I forgot to do the saver. Okay, change policy name. Yeah, we did that. Right here, savers credit. Okay, I got to do that still. So that's saying that I didn't take any money out of my account. So that credit is on here, form 8880. See how I don't even know where it is. So I just type it in, or still can't even find it. Heck is it? So anyway, I can either do 8880, and then here, remember 00, or I made a macro, Alt R, R for retirement, Alt R, and it's all zeros. So now if I go to my 8880, zeros. And again, I just have this, I just pre-filled the spouse. It doesn't hurt anything, even though there is no spouse. It doesn't harm anything by doing this in data entry. So I just do it to cover both in case I do have a taxpayer and spouse at some point. All right, that took care of that one. Next is this client might be eligible for a Michigan property tax credit, but they didn't bring their property taxes in. So as you know, we go into our favorite links inside the client file right here, and we have our property tax search for Lansing area. And this page will pop up, and I know they're in Lansing, so I click on here. And I can either enter their name, or I can enter their address or parcel number. They're never going to know their parcel number, but sometimes if their address doesn't work, I try to do it by name. So sometimes they might have abbreviations and it doesn't match exactly. So in this case, I'm going to enter their address. So I have 225 East Frederick. Hit enter. And it didn't like, why didn't it like it? You know what? I think I have the wrong address. I'm going to put in, right down. What is the one I want? 221. 221 East Frederick is what I want. So I need to change that on my client info sheet. Okay, so, and hold on a second. Go back to my address. 221 East Frederick. And I want this one right here. And this is the page I want. So that was a good example. You might go into the wrong page because sometimes they have multiple. I don't know why they have multiple listings for the same client, but what we're interested in is we have to see this tax information tab. That's the information we get. So I click on here, scroll down, and obviously I'm going to see my 2020s. Don't look at those because we're looking at 2019 right now. Obviously, when we're doing 2020 returns, we're going to just focus on the 2020s and not the 19s. So again, for the Michigan property tax credit, we're concerned with what was assessed. I don't care if they paid it or not. In this case, they did pay it. They actually paid 3 in 1 year, but I don't care because I'm worried about what's assessed, what was billed, which is this first column here. This is what was billed, and that's what I'm worried about. That's what I need. Okay, so I'm gonna move this over here. Actually, and then I'll show you everything. So I have to use another screen. So I'll key this numbers in here, and then obviously I hit the little triangle. Then I'm looking down here to see do I have anything that's not considered a property tax, and that's if the millage is 0, then I'm going to back that out. So this is recycling minus, I'm going to do a minus 110. When I click on my 19 for my summer taxes, I scroll down. I don't see any 0 millage. That means everything's a property tax. And again, I can include my admin fees in there as a property tax. And I'm also looking for my taxable value right here. So I'm going to move this over to this screen, and then I'm going to pull up Drake, and I'm going to key that in. So I'm going to go to Michigan, credits, CR, and right here's my taxable value, which I just said was 32,785. And I'm going to do a Control W or double click this, pop this open, and I'm going to record the 2 amounts. So I have 2019 winter is 435. Oops, put it in the right side. 435, and then I have 1601. Okay, and then I need that breakout, and I had minus 110 for my recycling. Again, you can, if you want to put the description, that's probably better. I like to do shortcuts when I can, when they don't harm anything. So I can always find out if you recorded it correctly because these numbers match exactly. So I can figure out which ones you use winter or summer. So if you want to label it, go right ahead. I don't though, because again, I like to do things as quick as I can, as long as they don't harm anything. And as long as I have a trail, I don't see any harm. Okay, so I escape out. So here's my total taxes, here's my taxable value, and I can go ahead and view this. I believe I entered everything in. So right now I have a balance due of $1,280 federal, $349 to Lansing, and I have a refund of $365. Let's go ahead and look at Lansing real quick. And I look, well, where's my East Lansing one? I don't even see an East Lansing one. And hopefully you guys know why that is. So right now I'm not getting any credit for any taxes withheld. And why is that? It is because on my W-2 screen, I entered exactly what they had on the W-2 for my locality name, and Drake has no clue what I'm talking about. So I'm going to go back to my W-2, and I'm going to enter in what Drake wants to see so it knows. LN is what it wants. And then EL is what Drake wants. So now it knows I actually have an East Lansing return. Before that, it had no clue what I was doing. Now it looks much better. So Lansing is $4 refund. East Lansing is a $3 refund. So what you probably need to do is do a little thinking. So if you were to see something and you see a balance due, and then because you know how city taxes work, and you're like, well, God, they didn't make that much money. How would he owe so much money? And they actually took taxes out. And where's my East Lansing? Okay, so but if you're just in a daze doing these returns, not paying any attention, you probably would go right by that and then shoot them a Lansing return where they owe money and not even do an East Lansing return. Okay, so you got to, many years ago, this is way before we had as great a training as we have now, we had a preparer who was working another job, like working over 40 hours, even that job, and come in was all tired. He actually did a city return and the client got back, I think, $10,000, okay, on the city return. So they basically keyed in on the W-2 screen here, like local taxes, some large amount, like they fat fingered it with 2 extra zeros or something. And you normally, when you view this return, at least I think this is a normal practice we all do as a preparer, is we tell them what their refunds are, okay? Because that's what the bottom line is. They want to know that. They don't need all the calculations and all that. The bottom line is, how much money am I getting? So he must have said, you're getting $10,000 back on your Lansing return. And nothing rang a bell. Like that didn't even ring a bell to him. So, and the client probably was just silent, like, oh my God, he's probably screwed this up. But if they give it to me, I'm taking it. But what I'm getting at is like, just try to pay attention a little bit. So it's like, if you see something that doesn't look right, but if you're like in a daze and like, and you can actually say someone's getting $10,000 back on their city and that doesn't even say anything to you. So we kind of got rid of that preparer and said, I think you're just too busy with your other job and you're coming in here half asleep or maybe even more than that. I don't know. And we weren't reviewing returns too. So that would have been awful if we reviewed a return and we didn't catch that. So at that point, we were doing any review. We are now. Just somewhat pay attention to what's going on. So hopefully that would have, when the person owed money, but you're like, well, I keyed it in, then go back and look, why isn't an East Lansing return coming out? Well, this is why. So, okay, so they actually owe money. So let's dig in and see what's going on here. So let's go to Lansing since we talked about that first. So I look at my Lansing, and here I got the 178. So that's correct. That's coming right from the W-2. And then they're getting credit for taxes paid of 175 because they paid East Lansing. So it gives them a total of 353 to go toward what they would owe. And so they actually get $4 back. Okay, now I go to East Lansing. And again, they paid in 178. Their total tax is 175. That's why the credit was 175 that went on, because it wouldn't be 178 because they're actually getting $3 back. So 175 went on the Lansing return as a credit right there. So in total, they're only paying, they might say, oh man, I'm getting screwed. I'm paying now East Lansing and I'm paying Lansing. This is ridiculous. Well, not really. You're actually coming out exactly the same, as because you were paying 1% when there wasn't an East Lansing tax to Lansing. So now you're still only paying 1% tax. It's now just being split up between East Lansing's getting a share and Lansing's getting a share. So you're not paying any more out of your pocket, other than you're paying me $15 to produce this East Lansing return. So when we e-file this return to Lansing, a copy of East Lansing should go with it to support, this tax is paid right here, so that Lansing doesn't question it. Okay, that takes care of Lansing. Let's take a look at the federal here. So now we got some forms, one new form, actually two. So I got my 8962, which is my marketplace, my 8889, which is my HSA. Let's take a look at that one because that's pretty simple to look at. So here's my 3,500. That just says that's the most I could put in. My employer put in 1,000, so I could put another 2,500 in out of pocket if I wanted to. Again, typically our clients do not. This is the 1,500 that I took out. I asked them, did you use it for medical? They said yes, so none of it's taxable. That's it. Case closed. Nothing more has to be done. Nothing flows into the 1040 because it's zero. the 8880, let's take a look at that. So on the W-2, it showed 2,000 went into a 401k. We said, I haven't taken any money out in the last 3 years. And I'm like, oh, wait a minute. How come I'm not getting any credit then? So hopefully someone out there says, I know why. And the reason it is this table right here. So their income is, she's single. So I believe her income falls between 32 and 38.5. So she's not getting any kind of credit. So we filled it out. So what we're going to do is we're going to do an adjustment on the bill. This form, if you look at the bill right here, it's, where is it? Form 8880 is $15. I like to fill it out just so I know that you guys did it. Okay. And then if they're not going to get any kind of credit, and again, it's a non-refundable credit, but her income's too high, then we can just go to the bill screen. And then I come down here and I just say, less 8880, and I do minus 15, and I take it off. Okay. But then I know that, because sometimes if you were to just delete it, and then the client were to call back, now granted, they might not call back on this form because they don't know a whole lot about this form, but let's say and they say, well, did the preparer do anything with that? So if I'm like a receptionist and I'm not very familiar with taxes, I dig in and I'm looking. I would not know if you did it or not, but if like this, they could look at the bill and say, oh yeah, it looks like, it must not have done any good for you because we didn't even charge you for the form. And so a receptionist probably could take care of that problem. But if you just delete it, and then the receptionist had to pass it off to me or to a senior preparer, and we'd have to dig in and look, oh yeah, that was it. Okay, so Eric didn't do it because it didn't do him any good. And that's why they didn't do it, and we had to explain. But it just took me probably another 5-10 minutes to dig in. Took the receptionist 5-10 minutes. Now I got to call the client back, explain to them for 5 to 10 minutes. We just added 30 minutes to that thing. Whereas if we just did an adjustment and back it out, I mean, if you want to explain it to the client, you can, or you can just back it out because the client may not even understand. But then we could easily. So it's like little things that the preparers do up front. They might take them an extra 15 seconds. Actually, if they look at the big picture, it saves a ton of time in the back area. So the preparers just need to know, like, I know their job is to prepare tax returns, but sometimes the way they do it and how they make notes and all that affects everybody behind them doing all the crap work, as I like to say it. So that's why we do the bill up front. I'm saying this because I'm hoping some of my senior preparers are going to listen to this video and maybe that will sink into them. Okay. Took care of the savers credit, took it off the bill. Let's take a look at the form 8962. And this is a calculation with a marketplace. So again, I don't have to get too familiar with don't worry about the calculation. I don't understand them, so I'm relying on the software to do the calculations. I'm looking down here to see what's going on. In this case, based on what they made, her income, which her income was what, 35,532, her being single. So what she paid in health insurance premiums, her share wasn't enough. So she needs to pay in another $800. Okay, that's kind of the cap. That's the most she can pay in. So this is going to be rolled into her tax. Okay, that's probably why she owes so much. All right, so when she owes, and unless she owed the same amount last year, and it's not a big deal, but this might come to a little bit of a surprise to her. So you kind of need to know what this form is a little bit, and then you'd have to explain, well, it looks like you made, based on what you made with your health insurance, you actually should have paid more in your insurance premiums yourself and not the government kicking in. And that's why you owe an extra $800. So what probably happened is when she filled out the paperwork at the beginning of the year with the marketplace, she probably said she was going to make less money than the 35,000. And so that's normally what happens. So she should be aware of, like, oh yeah, I thought I was going to make 25. I actually got a raise or a bonus or something like that. So that makes sense. So again, one is if we did the return last year, we can look at the comparison. So if it's a difference, I always want you to figure out why the difference is. And then if you can explain it to them in, language that they'll understand. So again, when they leave, they have a good feeling that it was done correctly, even though they owe more money. Otherwise, I can guarantee you they're going to talk to their friends or they're going to mumble and say, I'm never going back to X-Tax again. So we want to explain to them why things change. Okay, if you can't explain it, go get a senior preparer and then, we'll help you figure it out. So again, don't get into great detail, just a quick explanation. But that way they'll know that you know what you're doing, okay? And they don't think you just screwed it up. Otherwise, what's going to happen is they're going to pick up, one, they could never come back, which is the worst thing. But two, they could come back and call back and say, hey, I want a manager to look at my return. I think Joe did it wrong. Or it's just different than last year. So again, I usually handle kind of myself and some other preparers handle we call this garbage, okay? So we'll deal with it. We'll dig in. Again, it's going to take me time to dig in to figure out, did you do it right or did you do it wrong? Maybe you did it perfectly right. And then I got to explain it to that person. So I'm adding another 20 minutes at least to something I could be doing something else. So had you done your job and explained it to them within 1 minute or 2 minutes, depends on how many questions I had, they would be happy. They wouldn't question anything. They'd be on their way and they wouldn't call back. So all I'm saying is preparers up front, just do what I'd like you to do, and it won't cause extra work for everybody behind you that's answering the phone and dealing with the garbage. Okay, so don't give us any more garbage than we need. We deal with it enough. So just sorry about that. I'm getting off on the training, but this is all part of the training too. So one is do the tax return, but then do the little things that help the whole office run better. Okay. So that's this form. If you look at it, it goes to Schedule 2. There's 800 that's going to then flow into the tax right here. Bumps it up to 3,405. I think I forgot to do the heat credit. One is I just know they're not going to be eligible for it because they're single, but I'll do it because I want you guys to do it to get used to it. So heat was not included in rent because obviously she's a homeowner, so it's Alt-N. And she's in Clinton County. I just know that. So that is actually, no, she's in Ingham County. This is the Ingham County one. So that is number 33. I think she had Board of Water and Light, I believe. Lansing's Board of Water and Lights. And say gas. Okay, so I'm gonna hit the view. Continue. So if you look down here, Michigan, there is no heat credit because her income was too high for being single. Property tax credit, she is getting a property tax credit. Here's her taxable value of property taxes. Here's her income. Calculation spits out, that's a decent property tax credit. That's a nice one, 473. That's pretty standard. And of course, that gets rolled into their overall refund. Let me point something out here. So here's her standard deduction, tax, also that repayment of her premium tax credit, total tax here. Right here, we haven't talked about this, line 24, estimated tax penalty. She's getting hit with a $31 tax penalty, which is rolled into her overall tax, $1,280. So you want to kind of be aware of that. If the way the rule is, when we file a tax return, if the taxpayer owes more than $1,000 to the IRS, they can hit her with a penalty for not paying enough during the year. So the IRS is going to get their money. It's just they don't want to wait and get it late. They want it, as you earn the money, you're supposed to pay the money to them for taxes. So it's on a quarterly basis. So the rule is if you owe more than $1,000 when you file a tax return, it's not always, and I don't want to get into all the computations, but they could get assessed with a penalty. So that's one is this person is getting assessed with a $31 penalty, which isn't too bad, but it's because they owe more than $1,000. So when you see someone owing more than $1,000 for federal, one, look to see if they're getting a penalty, because this year for 2020, we can probably get them out of the penalty because of COVID. Okay, so, and I'll explain that when we go over all the 2020 new law changes. But for tax planning tips for them in the future, you want to make them aware of that, because a lot of people are not aware of that. So they're like, yeah, I'll just pay it when I file my taxes, which is fine. Some people like to do that, and they don't even care if they get hit with a penalty because they think they're going to make more in the stock market or something. But you want to explain to them so they're aware of it, because then they might start changing their withholding or send more money into the government during the year because they're not aware they're even getting hit with a penalty. So I did a tax return last year. Person was getting hit with a $500 penalty, and they had no clue because the preparer before that did the tax return, just told them what they owed, and they knew they're going to owe money, but they had no idea that there was a $500 penalty wrapped up in with that money, because it's like, well, if I knew that, I'd be sending money in before that. So it's kind of our job, our responsibility to let the client know that if they choose not to send more money in and they're fine with the penalty, I'm fine with it too. But I just want to make sure they're aware of it. Usually, if it's that steep, they'll send the money in because that's just like throwing away money, $500, because usually they have the money to pay it, like some of the seniors. It's just they figure out what's the difference. I'll just write a check at the end. I don't care. I have the money now or I have it then. So anyway, I want you to make aware of it. So if it's over 1,000, they can hit with a penalty. You'd see it right here in line 24. For Michigan, if they owe more than 500 when they file a tax return, they can get hit with a penalty, and the calculations are right here. And believe it or not, Michigan's penalty is more severe than federal. Federal is like 0.5% per month. Michigan is like 5% per month. So if anyone ever owes money in penalties, it's better to lower your Michigan than it is the federal if you can't do both. So in this case, they're getting a refund, so obviously there's no penalty. For the cities, if they owe more than $100 when they file their taxes, they can get hit with a penalty. Now, the city penalties are relatively low because the penalties are based on what you owe, and you usually owe very little to the cities because it's only a 1% tax or a 0.5% tax. Michigan tax, is a little over 4%. And then federal, of course, it all depends on, what tax bracket you are in. But that's kind of how the penalties are working. So what I want you guys to be aware of is that if you do a tax return, and then obviously for federal this year, if there is a penalty, and we're going to go over this in another training session, how to get out of the penalty due to COVID, which is going to be probably a lot of people this year. But also make sure you tell the client, and again, this is probably over the phone, hey, you're owing more than $1,000. Just want to make you aware of it, that the IRS can hit you with a penalty if you owe more than $1,000 when you file your taxes. Okay, you're supposed to pay it when you earn it, not at the end. Otherwise, there'd be no money for the government. There's two reasons. One, the government wants money so they can operate. Two, they feel like if everyone does this and they owe huge lump sums at the end, they're not going to have the money because a lot of people don't budget properly. So then they're not going to have the money to pay anyways. So it's just going to turn into a big mess. So they'd rather have you do it during the year while you're earning it and not wait to the end and give them a huge lump sum. So Michigan's 1,000, state of Michigan's 500 or more, and then city is 100 or more. Let's see. Let's make this scene so I get my green checks. Let's look at my messages. So I don't have an ID, and I got to do some pin screens, right? Okay, so to make things short, whoops, I'm just going to check the box. You guys are going to key it in, but it's going to say that I do my Alt P. My macro now for my Alt P is also checking the EF box, return not eligible for bank product. And then I got my Michigan Alt U. I can do my Alt E for my due diligence. I know this person's not getting earned income credit because they make way too much money for being single, but I'll do it anyways because it doesn't harm anything. And let's view it now. Now I got my checks. If you look here, we got an e-file East Lansing. Oh, I know what I got to do. I got to still do my direct deposit and my direct debit because I want to show you a few things on that. Okay, so I pull up my client info sheet over on my other screen here. And I'm getting refunds from Michigan. I owe federal, and that's it. And I'm getting refunds from these. So East Lansing, as of right now, we can't do direct deposit. So that one, they're going to get a check mailed to them. And Lansing, we can do direct deposit and direct debit. And then Michigan, you can do direct deposit and direct debit too. And obviously federal. So let's go in and do some of these. So I'll go to my DD screen. So no for federal because they're getting the MI for Michigan, and it's MSU Credit Union, and 272-479-663-3244, and we got checking 272479663. Oops, I did it wrong. What did I do wrong? Okay. 272479663. 272479663. There we go. 3244 checking, and now I'm going to come down here and I'm going to say no to federal. LN. That's how I have to do this. So I got to do it a number of times. And 3244 checking. 3244 checking. Okay, it takes care of that. Now I'm going to do direct debit. So yes to federal. F4, not doing Michigan because I'm getting a refund. 272479663 and 3244 checking. Oh, I did it again. 3244 checking. Okay, so now I need to put the because I'm beyond April 15th doing this, which is normally the due date of a tax return. So it wants me to actually put the date in. So I'm going to put today's date. So Alt D, that's the macro for the current date. Down here, this is for the state. We don't have any state direct debit, so I'm hitting F4. Then because this is federal, I have to go to my PIN screen and direct debit consent right here. So this is authorizing the IRS to do a direct debit out of my account. So if I don't check this box, I'm going to get an error message that I won't be able to e-file. So I'm going to go ahead and view this now. So we're still getting one. Oh, this is a new thing. So also, I didn't realize this until I did this practice problem. I'll go back. I need to have a daytime phone number if I'm doing a direct debit. So right here, it wants a daytime phone number. So I could enter it in here, or I can come back in here because it's going to pull from the screen. Hit copy, paste. So I wasn't even aware that was required. Okay. Now I got my green checks. I'm going to go ahead and look at this. And then, I don't know if I pointed this out before, obviously, I'm going to put an adjustment to my bill too. Or did I already do that? I think I already did that. So taxes owed 908, that's the net amount. So here's my federal, here's my refunds. So that's the net amount, how that works. So I go to let me look at my bill. Yeah, I already did my adjustment. Sets tab, here's my result letter. This is going to show I got direct debit, direct deposit, and then I'm receiving a check. Okay, then I go to my transaction summary. This is usually what we have, the client's initial, to make sure I didn't screw up and enter the wrong bank account information. So amount coming out, there's the date. These are going in, Michigan and Lansing, and City of East Lansing refund is going to be mailed to them. So you always want to make, if the client says they want direct deposit of the refund, that means they want every time they're getting a refund from anybody. Obviously, we can't do East Lansing unless they change for 2020. So don't forget to do the cities too, or Michigan. Okay, so sometimes we had clients yell at us, the preparer puts in federal, but then didn't do Michigan. Okay, so if they want one, they want them all. Okay, I don't know if I've done it probably once, but typically if you want, the IRS in there, you want the rest of them in there too. And the same way with direct debit, if they're willing to do direct debit. All right, now we're going to go ahead and this message down here for East Lansing is just saying that you can't e-file it, which we already know. Now I'm going to go ahead and PDF this. So I'm hitting my sets. So I want you guys to do this with the problem. So problem 25, you're going to store it in problem 25. So here I have it going to Drake PDF printer. Make sure you have it's saying Drake PDF printer. If it's going to a printer, you want to change that. Otherwise, you're going to send it and print it, which we don't want to print. We don't have to. Hit print. And again, this is now going to go to, it's already defaulted because I've already set it up on my C drive, and this is in the workstation, so I know that's correct. I just hit save. It's going to create the PDF. Okay, I'm all done. Hit escape. Now I'm going to pull open my atom. And I'll go right into my account uploads to do this, just so I can show you where it saves. So I'm going to hit browse, and I want you guys to do this too. So you can put it in here, just browse, grab it, label it tax return, and then save it. So now it's stored there. Now, obviously, if you're all doing this, you're going to see a lot of them in here. So once you do it, just go ahead and click on it to make sure it uploaded properly. So here it is over here. So now I know it uploaded. Sometimes when you PDF the return, and if you upload it before it's actually went through the whole process of calculating a PDF and you upload it, then when you click on this link, it shows there's an error. And so that's what the client sees too, because they're accessing the exact same thing just through our portal. It's just basically we're sharing this with them. So we want to make sure it opens properly. So, I mean, during the practice problems, you can do this. When we go live, you don't need to do it. Okay, just to make sure it runs through properly. And then go ahead and just delete it. Just delete a tax return. Don't delete the problem, okay? But that way, otherwise, we're going to have a ton of them in here, which actually isn't any harm. It's just the next person coming in to do the problem will see all these lists of tax returns and might get confused. Just don't delete these, okay? Just delete your tax return you just uploaded. And I think that's all I had. Okay. All right. That's it for December 4th training and problem 25. Everybody have a good day.